Hey guys, Mike here. So obviously closing out the first half of the year in the stock market, which was a complete dumpster fire, and I think it was the worst first half of the year in the NASDAQ like ever, as I showed you in a video last week. And I'm just curious, like in the comments, where are you guys at on this, or where do you think we're at, right? And I bring this up because I have a lot of people saying they're just tapping out. You even see some big YouTubers tapping out. And are we in the fear area? Are we in the capitulation, which is where I kind of thought we were waiting on? Are we just sitting here at the bottom over here and in despair, right? Where it's just like all hope is lost and stuff, which is usually, when you get your bottoms and stuff. And so in the comments, put, where you think we're at the market, where you're at, 'cause you might be in a different place than the market is. And, this is where it kind of leads us to what Michael Burry said Thursday, which was, adjusted for inflation, 2022 first half S&P down 25-26%. Everything's a dumpster fire. That was multiple compression. Next up is earnings compression, which I couldn't agree more if we have bad earnings. And what's strange about this is, if he's right, that means all the financial institutions are wrong. I mean, you have some financial institutions that actually believe we're going to set all-time new highs in the second half of the year on the S&P 500 by year end. Some have brought their estimates down lower, but the majority of them really hadn't made a big significant change. You got Cantor, Fitzgerald, they made a huge move on theirs. You got JP Morgan, or Morgan Stanley, excuse me, that actually has been probably one of the most bearish, and even theirs isn't that bearish of a case, to be totally honest with you. But the fact that the average, I think, is a 17% return by year end can be pretty astonishing, especially when you look at what's going on in the economic environment there, where there really isn't a whole lot of positives happening. And I think to give it a great snapshot of what's going to have to change in the second half for that to happen is this right here. These are the top performing ETFs in the first half of the year. SARK, which shorts ARK, is way up, 73%. Congratulations to those who got on that. Everyone else on here, I believe, is oil and gas ETFs, right? So energy, the things are just eroding and eating away at the consumers' pocketbooks, right? Which, of course, we're the ones that prop up the economy, because we're the ones that do the most shopping. And don't forget to hit that like and subscribe button, guys, if you get something out of this. And I think we can all agree, for there to be a good second half of the year, there's going to have to be a rotation, right? I mean, energy is going to have to come down. Those ETFs are going to have to start selling off, because that means money's rotating into other sectors, whether it be tech or whatever, in order for that to happen. I mean, is that going to happen? I don't know. I mean, that's really the key, right? Is oil going to stay above 100? Is gas going to stay, between 4 and 5 for the rest of the year? How is inflation going to come down? All these different things. Are people going to start rolling more into bonds? Now they've been beaten down. And so that's a big one. But I think the one thing you still see, and I'm still seeing this almost on a daily basis, is, and it's tough not to do it, because, I've done it before too, where you just take these snapshots of certain data and you try to compare it to the past, when, unfortunately, we're just in a very rare occurrence right now, a once-in-a-lifetime event, so to speak. At least I hope it's a once-in-a-lifetime event. And, you've seen people do this with the Fed's funds rate, and, will the Fed pivot? And you're seeing that a lot, right? If you look at this right here, and I've shown this before, but you can see what's different right now, right? Look at the last time we raised rates, right? 2017, we started it. The stock market, it went up, right? We had the little dip in 2018, the correction, but then it did go up. You'll see that multiple times. And then, of course, the Fed pivots under pressure, political pressure, not because of the economy, so to speak, and then starts lowering rates there in 2019. And, but if you look at what's happening now, we're raising rates, but what's happening to the stock market? Going down, right? Because it's the first time you've ever had rates and inflation at the same time. And so, or increasing rates and inflation at the same time. And the key is going to be earnings, right? That is the biggest thing right now, is going to be earnings coming up here this quarter. And you can see, we go back again, we were raising rates right there, trying to slow down the real estate market right here. What happened? The stock market still went up. It was volatile, but it went up, right? And then, of course, ends up being the crash. Before that, same thing. You see rates going up, stock market's going up. Actually, the stock market went sky high, for crying out loud. But again, you got the two X factors that we didn't have, right? You have inflation, and you have a Fed that is raising rates and doing quantitative tightening into a slowing economy, right? And so that's the big question is, I think everybody knows we're either in a recession or going into a recession, but what kind of recession is it going to be? Is it going to be a paper recession or a technical recession? But, because you've never seen a real real hardcore recession with unemployment like this. I mean, there's just no way. I mean, that's could have happened, sure. I mean, it would be catastrophic, but you know, it's just one of those things. When you look at this information, you got to take everything else into account as well. And there's nowhere on the chart where you're going to try to be able to do that, right? And so, you know, what's the second half of the year look like? I think I showed you on the NASDAQ what usually happens. It's actually negative as well in the NASDAQ, but the S&P is different. It can because it represents the overall market, right? The NASDAQ does not. And so you could have a much better half for the S&P, and the NASDAQ not look so great. That could absolutely happen. So it depends on where you're at. But I think the keys are oil, if it remains above 100, gas remains between 4 and 5, rents keep going up, you know, groceries stay high for everybody, inflation just overall stays high. And you know, these people, it's so many people now, it's becoming the popular thing that are betting, and even the bond market, they're saying it's calling for this, kind of calling the bluff the Fed, that they're going to pivot in September or October and just say we're not doing any more rate hikes. Right, and I'm thinking to myself, sure, it could happen. I mean, I have no faith in the Fed, but man, if inflation is over 5%, I'll say between like 5 and 7%, somewhere in that range, right? And they just pivot and stop raising rates and doing quantitative tightening. I mean, what kind of message did you just send out, right? Because they're supposed to have the tools, and that was their going to bring down inflation. And I'm like, that's only 3 months away. You tell me inflation is going to go from almost 9 down to, let's say, 5 to 6% in 3 months. I mean, and you know what? If that it does happen, that means oil fell off a cliff, right? Which brought gas way, way down, probably below $4, and supply chains just all of a sudden magically opened up, and here we go. And so, you know, could it happen? Sure. Why? And why can you say yes or no to that? Because we've never been in this situation. And so, but to me, those are the keys to having a good second half of the year if we have it. And right now, that's just a gamble. That's all it is. Because right now, they always say don't fight the trend, and the trend is down right now, right? The macro data is horrible, and that's why this earnings season will be huge to see where the margins are at, if Michael Burr is right, and now if someone's going to go through an earnings compression, because you saw what happened last earnings was not good, all right? A lot of companies got it down. Other companies didn't even give guidance. They withdrew their guidance. And so we'll have to see. Another thing worrying people right now is what's going on with the semiconductor companies like Micron, disastrous earnings, disastrous forecast, because everything takes chips. And if you're telling me the demand isn't there for the chips, that does not look good for the tech sector. And so that's something else we got to keep an eye on. So anyway, I hope you got something out of it. Hit the like, subscribe button if you did. I really appreciate it. And I'll see you guys tomorrow.